Hi, hello, welcome to Letham Trading. Now we are going to see Nifty end of the day analysis of 14th November and the trade setup for tomorrow. Okay, see friends, the CPR is in uptrend. Here this is yesterday's CPR here and this is today's CPR. So the CPR relationship is in uptrend. Okay, and the next thing what we observe is the location of the candle. See here, this is the candle location and observe the first 5 minutes candle. The first 5 minutes candle has a huge wick here, and we can't decide with this first 5 minutes candle because it is the body is very negligible. But remember one point here, when the market travels from CPR, see the wick has almost came near the CPR. If the market travels below the H3, then at H4 most probably the market will take a great resistance. If at all the market opens in between this H3 to H4, and if it is not coming below H3, then there will be a chance of breaking H4. But if the market is traveling around this below this H3, then most probably the market will definitely get rejected at H4. If at all it breaks H4 also, it cannot sustain for more time, it will definitely come down. So most probably there will be a bearishness only. Okay, observe the second 5 minutes candle. We can't decide with the first 5 minutes candle, though it is at H3. We can't decide with the first 5 minutes candle. Okay, we'll see for the next 5 minutes candle. We'll always wait for the candles to close, right? See this next 5 minutes candle. This is a bullish pin bar at H3. Observe, if you see this bullish pin bar at H3, you may think that the market is going to be bullish. Then you will take a call position. But what I told you now, if the market travels below this H3 and if it comes near H4, breaking H4 is not easy. So if you take call just because of this bullish pin bar at H3, you can't get a good risk reward ratio because it cannot travel more than H4. Right? So we don't take call position and we'll wait for some time for a clear price action. And observe this candle, the third 5 minutes candle. The third 5 minutes candle has clearly given indication that the market is going to be bullish. See, if you enter a trade here at this point, keeping stop loss here or above H4 is fine, because the distance between H3 to H4 is very less. So see, if you take entry here and your stop loss will be above, just above this wick or H4. If the market comes above this H4 or this wick, then there will definitely be a bullishness only. But there are 90% of the chances that if the market forms this type of candles near major resistances, then there is a chance that the market will definitely fall. So taking entry here at this point, keeping, see, if you observe here, why market has traveled more than H3 today? Because the distance between H3 to L3 is very less, that is only 60 points. So the market needs some space to travel. And also observe this first 5 minutes candle. Whenever this type of candle has formed, it needs some swing. See, if it takes up, if it gets rejected at this point itself, the wick will be here, right? So to cover this wick, definitely the market will come. And also there is H4. So if you just stop taking an entry just because if the market comes near H4, then I'll look for a clear price action. Don't do that mistake here, because this candle is there, right? This is clearly indicating us the bullishness. If you just wait for the H4 price action, you'll just miss the trade, because just crossing this red rejection pin bar, the market will definitely become bullish only. But since it has traveled more today, again at H4 there will not be a clear price action to go for a put or call. So taking a trade here at this rejection candle is the best thing today, and the target will be up to central pivot. See, this is central pivot, but you can exit here at this point also according to your risk reward ratio and your mindset in the live market. See, if you have waited for almost this consolidation, most probably there will be premium eroding. If you have taken futures, then you'll get a good target today. So our target will be up to central CPR. And this is the only trade for today. I don't suggest you to take one more trade. Whenever the market is coming near CPR, the market will definitely be volatile only. So taking only single trade is the best thing what we can make easy trading. And we'll move on to the next day, that is 15th. Okay, the CPR is in uptrend, but observe the distance between the CPR. The distance is very less. It is only 20 points only, and also H3 is inside the CPR. I feel like the market will be trendy tomorrow because the distances between L3 to L4, H3 to H4 is very less. H4 to H5 distance is only 50 points. It's not at all more than 50 points. When the market has been congested, if the market opens, remember this point, if the market opens gap up or gap down, see, if the market opens gap up or if the market opens gap down, then there will be a chance of trendy day. If the market opens in between these Camarilla points, then there will not be a trendy day. You should think about taking a trade because the distances are very small. You can't get a good risk reward ratio. So taking a trade if the market is gap up or gap down is good thing. If market opens gap down and if it gets a bullish candle, then you can take a trade and your target will be up to CPR. Or if the market opens gap up and if it gets rejected from the top, then you can also definitely take a put position and the target will be according to your risk reward ratio, and most probably that will be a trendy day only because it will break H4, H3 and it will continuously go on breaking because of the distance, because the distances are very less. Okay, thank you. I hope this video will help you. Please subscribe to our channel.